Hello guys, it's Naman this side from Investage Capital, and as requested, today we are going to discuss about one of the most requested topics. Okay, so how to avoid false breakouts. Now, breakout is something which everyone likes to capture because it gives a quick movement, and it gives a big and a very quick movement, right? So now the major concern is many people while catching these breakouts, they get stuck in the false breakouts. So here we are, okay, with how to avoid false breakouts. So today we'll be having a quick discussion about how to avoid false breakouts. So let's start. So first of all, what is a breakout? Okay, this is the textbook definition of the breakout. Okay, so a breakout is a stock price moving outside the defined support or resistance level with increased volume. Okay, a breakout trader enters a long position after the stock price breaks above resistance, or enters a short position after the stock breaks below the support. Okay, so once the stock trades beyond the price barrier, volatility tends to increase and prices usually trend in the breakout direction. So what it simply means is that let's just take a quick example. So I'll open a chart of NLC India, right? So as we can see, this is the weekly time frame. Okay, so as we can see, this was a resistance. Okay, this is a trend line resistance, and this is a horizontal resistance. All right, so let's just take this trend line resistance for now. So what it means is, what is told over here, that a breakout trader enters a long position after the stock price breaks above resistance. Okay, so this is the trend line resistance, and once the stock price breaks above the trend line resistance, okay, so here somewhere the breakout trader would enter. All right, and what happens is the price, it tends to move, okay, it tends to trend in respective direction. So if it has broken the resistance, okay, it will trend up. All right, and if it has broken the support like below, okay, so let's take an example of the support. So we can see that let's just take here. So we can see that this is a good support zone. All right, this is a good support zone. So if the stock price comes below, okay, if it comes over here, if it consolidates for some time, and if it breaks the support zone, right, so now there'll be no buyers left. Why? Because the buying interest, that is the demand, it was in this zone only, and once this zone is taken out, then the stock would break out and it would trend in the downward direction. Understood? So same goes when it breaks out of the resistance. So now we can see that the stock was following this particular trend line since a long time. Whenever it touched this trend line, it faced the selling pressure. So once it has faced the selling pressure multiple times, the sellers which are present at this trend line, they get weaker, right? And once the sellers get exhausted, the price breaks out, and then the stock price tends to move in the upward direction. It tends to trend in the upward direction. So this is basically what is a breakout and how a breakout happens. Now the main question, how to avoid a false breakout. So let's start. So the first and the most important point on how to avoid false breakout is that you have to avoid parabolic moves. Okay, so what is parabolic move? Parabolic move is a one side move. Okay, so let's take an example. So yeah, yes, so here we can see that this is a very good resistance zone. Okay, I'll open the higher time frame. So here we can see that this is a very good resistance zone. Okay, around 75 to 80 levels. This is a very good resistance zone, right? So now we were awaiting the breakout of this particular zone, but what happened is that over here we can see a one side move, that is a parabolic move. This is a parabolic move without any consolidation, just one side price movement before the breakout, right? So before the breakout, if you spot a parabolic move, that is a one side move, there are high chances that the breakout might fail. Why would this happen? Because there is already too much, already too much buying which has happened in the stock. Now in order to propel the stock further, it is very difficult for the buyers to keep up with the pace, right? So here once the stock it reaches the resistance, okay, after the parabolic move, what usually happens is that the stock faces a sharp reversal. Yes, you heard that right, a sharp reversal. Why? Because the sellers they take hold of the stock, all right, and then they propel the stock downwards. So what you have to do is you have to avoid, if you see a stock showing a parabolic move before the resistance level, you have to avoid that. You don't have to enter in the trade. It's okay if you miss it, that is completely fine, but if it will save you from a bad trade, right? So now I'll tell you how, like, what should be the case when you have to enter in the breakout trade, okay? How it would be different from this. So we'll cover it in the coming points. So the next point is that, yeah, look for build up slash contraction before a breakout. So now what is a build up? So I'll show you an example. So yes, we have IndusInd Bank, and just a second, yeah. So what we can see over here is that the stock was taking resistance from this particular trend line, and now since a long time, as you can see over here, the stock was consolidating before the resistance. So as you can see, it is showing a very good consolidation, like up down up down up down up down before the resistance. Okay, now this is not a sharp reversal. All right, a sharp reversal would be something like this, be something like this. Now this is not a sharp reversal. Okay, just a second. Yeah, so this is build up. So this is what you can call the build up. So if you spot a build up before the resistance, then it is a very high probability trade, and the chances of it giving a fake breakout are very low. Why? What this shows us, okay, I'll make you all understand the logic behind this. So what this shows up is that the once the price comes up at the resistance, now what should happen, okay, what should generally happen is that once the price reaches the resistance, the sellers will step in and they will take control, and what will happen is that they will sell the stock, and which will cause the stock price to move down, the stock price to reverse. But instead what is happening, the stock price is not showing any reversal. Instead it is holding the price, okay, the stock is holding the price. Okay, so whenever the stock retraces a bit, again buying interest comes, again it retraces a bit, again buying interest comes. So this shows that the buyers are also in control. Okay, the sellers are trying to push the stock down, but the buyers are also in control, and they are showing demand at this particular price as well, which is causing the stock to consolidate in a tight range. So what will happen is that in some time the sellers would get exhausted, which would cause a breakout. So this is a breakout. Okay, so after a good consolidation, it finally broke out. So this is what you can call a contraction slash build up or consolidation. Okay, so if you spot something like this before the breakout, then it would be a very high probability trade, and this is the type of trade which you have to take. All right, now next we move on to the next point. So the next point is that look for candlestick pattern at the breakout level. So this is a very simple point. You just have to look for the candlestick pattern. There should not be any bearish candlestick pattern at the breakout level. So here are few bearish candlestick patterns. So if you spot a bearish Marubozu, or if you spot a bearish engulfing, or if you spot an evening star pattern, these are the candlestick pattern. If you spot something like this, then there are chances that the stock might give a fake breakout. So again we can have a look at this particular stock. So here we can see that at the resistance level, first of all it had formed a doji, and then it formed this hammer, which is a bearish sign. Okay, this is a bullish hammer, but but this is a bearish sign in technical analysis. Why? Because here what we can see, the stock price had opened over here, the buyers managed to get the stock price over here, but then the sellers stepped in and they gave, like, this particular day had a very bad closing. Okay, so this is a bearish sign. So if you spot something like this, or let's say a bearish engulfing candlestick pattern, or an evening star pattern, something like this at the resistance, okay, at the resistance at the breakout level, then you just avoid the trade. You can either exit the trade, or you don't simply don't take the trade. Okay, so candlestick pattern is also very important to be spotted at the breakout. Okay, there now there what you should expect instead, there should be a bullish Marubozu candle. Okay, so all the bullish candlestick pattern, if you spot anything at the breakout level, then it's a very good trade. Okay, so next point is that keep a close watch on the volumes. Now obviously this is self-explanatory, and you just have to take trades, like you just have to take the breakout trades where you spot volumes, right? So yeah, so now obviously volume is something which will come after the breakout has happened. Okay, that is obvious, but what you have to consider is that during the time when the breakout is happening, if you spot a boost in the volumes, okay, if extraordinary volumes are coming in, double, triple, five times then the average volume or more than that, then you can consider entering. Okay, so if there are volumes coming in during the breakout, then it is then there are high chances that it would be a successful breakout. All right, so here we'll just look at an example. So see, as you can see, I already showed the chart of NLC India. All right, and this is the day when NLC India had broken out over here. Okay, so on 19th April. So let's just see on 19th April. So yeah, so 19th April, here you can see high volumes coming in. So wait, I'll just show you a better example. So this was actually a breakout candle, and see the extraordinary volumes, and after this over here, after this some consolidation we would see, and after that again an up move with increase in volumes. But I'll show you a better example. So yeah, this is a good example. So this trade we had taken, in which we had captured 20% move in intraday. So this trade we had taken in the group. So here we can see that the stock price was following this trend line. Okay, it was taking resistance, and here we can see a build up. This is a consolidation, and then we can see a very beautiful breakout. So I'll just show you the 5-minute time frame, and here, so this is what you can call a successful breakout. And here see, you can have a look at the importance of candlestick patterns as well. So here this is a hammer. Okay, and here we can see a bearish engulfing pattern. So this is a bad sign. So therefore the breakout failed over here. So this is how you have to see the candlestick patterns as well. And here we can see a very good bullish Marubozu, again a very good bullish Marubozu. Like these are having small wicks, but yeah, that's fine. And we can see an increase in the volumes, right? So you can see how beautiful this breakout was with the volumes. So this is the type of trades which you have to take. Okay, and this is the type of volumes which you have to expect during the breakout. If such volumes are not coming, then it is better to stay away from that trade. Okay, and next, look for multiple touch points in the setup. So this is also again quite self-explanatory. Okay, so see, one thing I'll tell you that I'll just show you with an example. So let's just assume that this is a chart. Okay, and here it had taken a resistance. Okay, so here it had taken a resistance. So I'll just mark a line over here. So let's just assume that this is a resistance zone. Why? Because one time price had come over here and that it had reverts. Now if the price comes over here again, okay, and if you are planning a breakout trade, this would be a very low probability trade. Why? Because there is only one touch point. Okay, there are not multiple touch points, there is only one touch point. So this would be a very low probability trade. In fact, what would happen is that the price could easily reverse from here, and then it might just move. So this is a very low probability trade. Instead, what you have to look is that the price, it has come over here. Okay, then again like this, and again like this, and then if it comes over here, okay, then if it comes over here and it shows some sort of consolidation, then there are high chances that it would break out. So these are the type of setups which you have to capture while you are catching these breakouts, right? So you have to look for multiple touch points. So here we can see multiple touch points. Over here we can see one, over here again here, then here some consolidation, and then finally a breakout. Yes. So see, I'll again show you few examples where this is going on. So first we can see this. Yeah. So a classic example. Yes. So here we can see one, two, three, four, five multiple touch points. Again, the stock price is a bit low now, but if the stock price comes over here near the breakout levels, then this would be a very high probability trade because it has got multiple touch points. Yes. So a few more examples, which yeah. So we have MHRL, and here also we can see over here. Yeah. So once, then twice, then you can consider this as well thrice, then here multiple times, and here again the stock is consolidating. This is what we call a build up with good volumes. So here the stock is consolidating, okay, here, and now there are high chances that the stock might break out. Why? Because it is spending time near the resistance with good volumes. Alright, the buyers are able to take control over the sellers. Okay, so now high chances are there that it might break out. So it is, I guess it is declaring result. So now according to the result it may move anywhere, but if, let's say, if the result was not there, then there are high chances that the stock would break out very well. So I'll show you one more example. So we have this, we have Giant Agro, and here again we can see this is the type of setups for which we are looking. So here we can see one and two times over here, and again here we can see, and see this is something which is a bearish candlestick pattern. All right, so twice, thrice, and here again we can see. So it is holding this level. So if we come on the daily time frame, it is sort of trying to hold this level. If it moves over here, if it sustains at this price, then there are high chances that it might break out. And just look at the beautiful volumes over here. So these are few setups which I'm tracking, even car trade. So again this is an ascending triangle pattern. This is the resistance, again with multiple touch points. So here once, then twice, then thrice, four times, five times, and again it is spending time. Okay, so here we can see a good amount of consolidation in the stock. So now there are high chances that it will break out. So here were few examples, and now the last point, and which is a bonus point as well. So what you have to do is you have to look for the overall sector slash stock peers and their levels. So what you have to do is, if, let's say, if you are targeting a stock from the IT sector, let's just take TCS for example, what you have to, and you spot a good opportunity, a good setup in TCS where it might give a breakout. What you have to do is you have to analyze briefly other IT stocks such as Wipro, such as Tech Mahindra, and you have to see whether those particular stocks are present at the breakout as well. Or let's, I mean, just assume that okay, even if the stock, even if the setup is not as perfect as it is of TCS, but still if you think that even these stocks, or you can take the sector, that is Nifty IT, if the sector as well it is present at the breakout level, then your breakout trade would be a high probability one, as the sector rotation might happen and there are high probability that the whole sector might break out and most of the stocks in that sector rally. So here is how we had caught this opportunity. So see, GPT infra was captured. I had already showed you the setup, and just a second. Yeah. Yes. So GPT infra was captured, and this was the day when we had captured it. So on 26th of April, we had captured GPT infra. Now again, along with this particular stock, we had captured on this particular day as well, we had captured Ramki infra as well. Okay, so this, it was showing contraction, and see the date, again it is 26th April, see the date below, it is 26th April. So both these stocks belong from the same sector, okay, that is infrastructure, and they have somewhat similar businesses, okay, not fully, but again, yeah. So this is how sector rotation happened. Both of these stocks were present at the resistance, okay, even this and even Ramki infra, it was also present at the resistance. and both of them gave a breakout in the single. I mean, both of them gave the breakout on that particular day only. So this is how you can catch more and more high, like this is how you can make your trades more and more high probability, right? So this is something which it would take time, but if you observe in the broader market, if you observe the peers, if you observe the sectors, so this is something which you will observe that all the stocks are moving together, there is sector rotation happening, right? So this would help you further in getting more and more high probability trades. Okay, so this is how you can avoid false breakout. I hope uh, everyone was like, I hope we were able to add value. I hope all the points are clear whichever we had explained, and if you follow each and every point, okay, correct, if you follow each and every point correctly, and if you like, it will take some time, but if you observe especially the last point, which is look for the overall sector and the stock peers, if you observe that in the markets, you would be able to filter out the best of the best trades. So I hope we were able to add value, and hope the doubt that how to avoid fake breakouts is clear. So if you want to learn from us, if you want to join our mentorship program or join our Telegram community, then these are the handles. You can reach out to us, and thank you so much for watching this session, and we'll meet in another session soon. So thank you and signing off.